Money is printed by central banks, but control over money is far bigger than just printing. Who really controls the global financial system? At first glance, it seems simple. Governments print money, so they must control the system. But in reality, control is distributed, layered, and interconnected across institutions, markets, and power structures. No single entity fully controls the system, but some actors influence it far more than others. 10 forces that actually control the global financial system. 1. Central banks control the cost of money. Central banks set interest rates, manage liquidity, and influence inflation. By controlling the price of money, they indirectly shape borrowing, spending, investment, and asset prices across the entire economy. 2. Governments control fiscal policy. Governments decide taxation, spending, deficits, and public debt. These decisions determine how money flows through the economy and which sectors receive support or pressure. 3. Commercial banks create money through lending. Most money in the economy is not printed. It is created when banks issue loans. This gives commercial banks enormous influence over credit expansion and economic activity. 4. Financial markets allocate capital. Markets decide where money goes. Investors choose which companies, countries, or assets receive funding. This allocation shapes growth, innovation, and economic power. 5. The US dollar system anchors global finance. A large portion of global trade, reserves, and debt is tied to the US dollar. This gives the US financial system a central role in global monetary stability and liquidity. 6. Institutional investors control massive capital pools. Pension funds, hedge funds, sovereign wealth funds, and asset managers control trillions of dollars. Their decisions move markets and influence global capital flows. 7. International financial institutions set rules. Organizations like global financial bodies influence lending conditions, economic reforms, and crisis management. They shape how countries access capital and respond to financial stress. 8. Credit rating agencies influence perception. Ratings determine how risky a country or company appears. Lower ratings increase borrowing costs and reduce access to capital. This gives rating agencies indirect power over financial stability. 9. Technology and payment systems control access. Modern finance depends on digital infrastructure. Payment networks, settlement systems, and financial technology platforms determine how money moves globally. 10. Trust and confidence control everything. At the deepest level, the system runs on belief. If people trust the system, money flows smoothly. If trust breaks, even the most powerful institutions struggle to maintain stability. Final truth. No single entity controls the global financial system. It is controlled by a network of power, policy, capital, and trust. And the most powerful force among them is confidence.